We can identify the new wave in the market as it broke out with a gap up from a candlestick buy signal, kind of a cradle pattern, J-hook pattern, through a resistance level, the small resistance level here and a major resistance level that had been occurring over the last 5 or 6 months. The fact that when they broke through this level told us we were now in a new wave, that this big sideways move that had been going on for the past few months was now over, and investor sentiment is taking things back up. What we've identified after that is the fact that the T line acts as a support. And there's a very simple trading rule using candlestick analysis. As long as you see a buy signal and the continuation trading above the T line, you're in an uptrend. The same type of analysis can be applied to the NASDAQ. As it broke out through this resistance level and did it with a left-right combo gap up, and notice after that how the T-line acted as support. So for the investors that are saying, oh man, we're way up high, we should take profits, we don't know whether this trend is over or not. All we can do on a very simple trading basis is you stay long until you see a candlestick sell signal and a close back below the T-line. Although the market is in a slow, steady uptrend, candlestick investors can take advantage of the strong price patterns, such as a best friend signal. Our recommendation on GH was based upon an uptrend, a pullback, and then a best friend gap up, again, opened at the T-line and went positive, producing a strong indication that not only will we be in an uptrend, but we're going to be in a stronger percentage uptrend than just merely owning stocks that are trading up in a slow upward market. Knowing what patterns produce the big price moves, as we identified the fry pan bottom occurring in Visto, VSTO, and we saw that it was doing a scoop type pattern right here, trading back up above the T-line, we could stay long as it didn't close below the T-line. And where does the exuberance come in? Right at the breakout of these fry pan bottoms. This is what produces exorbitant profitability, just knowing what normally happens in human nature or pattern breakouts. Our current recommendation on DXC was based upon a fry pan bottom with a best friend breakout through the 50 and confirming our fry pan bottom. Today, after yesterday's consolidation, it was trading positive with the idea that it has the possibility of moving all the way back up to the 200-day moving average, back up into this level. Now, will it get there? We don't know, but the prospects or the probabilities of seeing investor sentiment getting very strong coming out of a fry pan bottom puts us in positions that have the potential of having those big price moves. The J-hook pattern is a classic pattern that occurs after a fry pan bottom. This is why we call it the classic pattern. What's our prerequisite for a fry pan bottom? A strong price move. I'm sorry, say that the other way. What's our expectation coming out of a fry pan bottom? A strong price move. What's our expectation of a J-hook pattern? The prerequisite is a strong price move, comes back to the T-line, shows buy signals. We can be buying here with the expectation that positive trading is going to take us up into this magnitude of the next move. Do we always get moves like this? No, but it puts us in positions where the probabilities that something is happening to create a very strong price move is being identified in the pattern that is setting up. There are approximately 8 or 9 candlestick patterns which were created by human nature, doing the same thing time after time. Our recommendation on ANDE is based upon that same factor, that a fry pan bottom is setting up. We also look at J-hook patterns, cradle patterns, belt hold signals. The candlestick investor has the advantage of knowing what the result should be based upon witnessing a buildup of a pattern and knowing what the expectations to the upside will probably be. That'll be it. We'll see you in the chat rooms.